Okay, so this session has started before. All right, so one of you have actually asked that I told you guys that the price, I told the particular person that the price is going to dump when it was all the way over here. And to me, they were saying that actually the indicators and everything is indicating for a pump, but it turned out to be a dump, and I told them that it was supposed to dump. So how did we do that? So the reason the price dumped from there, you're asking us, first of all, there is a clear supply zone over here. Prices dumped from here once, twice, thrice, four times, and now it's at fifth time, all right? So it's not like a line over here, it's like a zone, which is the supply zone. So the way we draw a supply zone is we use parallel channels, and the way we do it is that we do this, and we do it like this, right? So now, seeing that, you could see that the price, when it was over here, actually, it's in the supply zone. When it's here, it's in the supply zone, and over here as well, it's in the supply zone, right? Then there's this other thing. There are two very important fair value gaps left over here, which needed to be filled, right? And in the fair value gap section, I have told you, fair value gap is a candle which has no shadow in front or at back of it, and the price always comes down to fill it. And as soon as it hits the fair value gap, it bounces back up. So in this case, the exact thing happened. The price dropped from the supply zone, hits one fair value gap, bounces a little bit, hits the second fair value gap, and is bouncing so forth. So at this point, we told you about the dump. At this point, we told you about the pump. And it all happened because we know that the price, it falls from the supply zone and hits up the fair value gap, and then it bounces back up and starts filling up the remaining portions. Okay, so the reason why Bitcoin has dumped does not come to just one technical analysis. Like I've told you, we have to apply all the things all together. So in this case, we used supply and demand zones at number one. Secondly, we used fair value gaps, the knowledge of fair value gaps. And let me repeat myself, the price always dumps from the supply zone. And whenever there's a fair value gap, the price goes down to fill up the fair value gap. And by filling up the fair value gap, it's just that, as you can see, I've marked these zones, these two zones actually, this one, right, this blue area, and the second blue area is basically the two supply zones over here. And by filling up the supply zone, just means that the price comes down to this area, right? So as you can see that the price is coming down to this area and and pumped back up exactly after filling this area. Can you see this very beautiful thing over here that the fair value gap is only till here, all right? There's actually a shadow below there. So this fair value gap is only till here. You can see that the price just comes to this area and starts to pump back up. That means that the price came down just to fill up this fair value gap and is now pumping back again. Where is it going? Obviously, it can go to this fair value gap that the price has left behind while it was dumping. All right? That's why we have drawn this line, this blue line over here, a couple of days ago. And so far, the price is respecting it. If there's any changes along the way, we'll let you know that, okay, the price is forming another pattern or something like that. And not just that, like I always tell you, that there's a confluence of many a technical analysis. So as you can see over here, if I actually zoom in, if I actually zoom in over here, you can see that in our case, there's actually a doji candle forming over here as well, right? And I've told you many times, in price action, if any candle, it's really important. It's either doji candle or the engulfing candles. All right. So in our case, there's a doji candle forming over here, and doji candle is an indecisive candle. This is a doji candle. All right. It doesn't matter the color. If the doji candle forms at the supply or demand zone, that means the price will reverse from there, right? So at the supply zone or at the demand zone, right? This is the supply zone, right? Doji candle is forming over here, and the next candle is red. Consider it a confirmed dump, all right? Similarly, if red or green, doesn't matter. If a doji candle forms at the demand zone and the next candle is also green, consider that the price will pump from there, right? With that being said, we now know that the price always dumps from the supply zone, pumps from the demand zone, and doji candle just helps us know that it is going to happen now. Because all of this time the price is in the supply zone, all right? All of this time the price is in the supply zone. We don't know when it's going to dump, all right? So doji candle just gives us a hint that okay, this is the time when it's going to dump, and this is the time it cannot dump. Okay. Furthermore, as you can see over here, this is actually a double top forming over here as well, right? It's actually a triple top, all right? But we will still consider it a double top since there is one bottom which is making the neck, right? And then there's this two tops, right? This did not actually came so much down, so we're just still counting it as part of this top, right? So we're counting this hole as a top. And as you can see that once it breaks down this neck level, then it can further go down. So this double top kind of thing is not helping us predicting this dump from here. It's only helping us predict that the price, if it's dumping below this neck, then actually it's going to go to the second fair value gap as well. Because there's a possibility that the price, if it dumps still here, then it can move a little bit over here and then come back to fill up the fair value gap, all right? It's up to the price. It can either jump straight away or can take some time and then come back to it. All right. So see, now many things are actually helping us predict this dump. And just when you think that it's over, all right, this is all the technical analysis we used, you're wrong. So you have to go ahead and search BTC. Yeah, I'm going to go ahead and search maybe in all section. BTC1 exclamation mark. That is our thing. Okay, this is BTC1, which is CME. All right, this basically is showing us CME gap. All right, for those of you who've taken my CME gap lecture, you know that what is a CME gap. CME gap is basically created whenever the price. Okay, let me tell you actually. Where are my annotations? Okay, so now you know that price, basically crypto, is 24/7. However, this is not the case with stocks, right? Stocks only operate 5 days a week, and on weekends, the stocks are closed. It just so happened that the stocks also list Bitcoin futures as well, all right? So the stocks are also listing Bitcoin futures. So on the weekends, the trading in stocks remains to be closed, and so is the Bitcoin. So what happens is that uh, whenever the weekend happens, then let's say on Friday, the price of Bitcoin, on an example, the price of Bitcoin was 90K, all right? And over the weekend, when the trading on the stocks platform was stopped, over the weekend, the price of the Bitcoin increased up to 100K. Now, on Monday, when the price is going to reopen on the stocks, it's going to show this gap where no trading has actually happened, like over here. Okay, so what happens is that this happens to be the CME gap, right? And CME gap happens to behave exactly like fair value gap, right? So we had marked the CME gap as well. The CME gap was created, and it happens just like fair value gap. Whenever CME gap is created, it always comes back to fill it up. Like you can see over here, this CME gap is also created. It got filled up, right? The CME gap was created along the way. The price dumped down to fill up this CME gap, and so did this particular CME gap. And as you can see that as soon as the CME gap got filled, this one over here, the price is pumping now, all right? So just to repeat you, Bitcoin Bitcoin future contract is also listed on the platform where stocks are traded. I'm not going to name the platform now because this is covered in a separate lecture. Once again, you can check out the complete lessons drive that I've sent you. I will resend it again if you want to, if one of you guys did not got it. So you can watch onto it. All right. So stocks, the platform on stocks, they also list Bitcoin futures. And on weekends, they don't trade Bitcoin. So on Monday, when it opens with a gap. And this gap behaves like fair value gap. Just like the price comes back to fill up the fair value gap, the price also comes back to fill up the CME gap. You might actually, if you are anyone who is very well in touch with uh, with Bitcoin and crypto market, you might have heard this that, oh, BTC is filling up the CME gap. Oh, CME gap is getting filled. All right. You might have heard this because CME gap is a very common thing. It's one of the stem level analysis. We actually keep an eye on CME gap. And just like that, you can see that the CME gap got filled over here. So these are all the reasons why we were expecting a dump from that level in Bitcoin. And that's to your answer, why Bitcoin was dumping over there, while some of your indicators were telling you that the price can rise from there, telling you that the price is oversold, right? And the price can pump from there. So that's why indicators are just a machine, it's a tool, right? Do not rely on it altogether, right? It's not a very good thing to just rely on an indicator. Rely on your brain, all right? Use your brain. Use the technical analysis that has been taught to you, all right? Use that logic. Use the trading psychology. Like the reason I spend all of this time explaining you how trading psychology works, how how liquidity works, right? And how to basically know the psychology behind every move that's created on the chart. The reason is that you should, once you know the trading psychology, you can behave, you can understand the market, and you know where market is going to go. Okay. So everyone, that's all for the Bitcoin analysis. Any questions? Is it clear?
Yes, sir. It is clear. But one thing more, sir. Go to Bitcoin chart again. The previous one you have showed.
It's right here.
Yes, sir. Sir, on 4 hour chart, uh, sir, back, sir. Yes, sir. Sir, there are three candles back on green candles
Okay.
from start. From current price, there are three candles. One is hammer.
Okay. Understood.
Yes, sir. That's the point. No, sir. Previous one, red candle hammer.
This one?
No, sir. Upside.
This one?
The third last. Yes, sir. Sir,
Okay.
there you provide the signal, and the indicator was in favor of long, and the doji candle also performed on the uh, demand zone, and the green candle uh, and two green candles. I have told you in your chat three crows. There is chart patterns. Then two candle formed as two crows, and I said that will be happen. But you said there is dump. There will be dump, but chart gone down. What was the
Mhm.
reason there? You said I will tell you later.
Aha. Like I said, the reason is simple. There is a fair value gap left behind that needs to be filled, right? So the price cannot just rise back from here. It's going to dump from there to the fair value gap, right? It has to dump and it has to fill up this last fair value gap. And as you can see that the price has filled up this last fair value gap all the way till here. The price has continued the rebound. Okay, so now sometimes it's not just the fair value gap, it's the liquidity as well. At that time, we were looking at the liquidity chart as well, and there was a huge liquidation lying just below here, right? So not just the fair value gap, but liquidation also helped us to decide that the price is going to dump from there. Even though all of your indicators were telling you that the price is going to pump from there, We told you that the price will dump from there, knowing these things, knowing fair value gap and knowing the liquidity. Okay, it's not really wise to just make a decision based on a candle. All right. Like I said, price action, we keep it at a branch level concept. We don't take it as a stem level concept. We take it as a branch level concept, and we don't fully rely on it. We don't make a trading decision based on a branch level concept. All right. We always make trading decisions based on stem level concept. So you cannot just sit down and see at a hammer candle and then go long because that's just a fool's option, right? Price action is stupid like all by itself. It just doesn't apply, okay? As you can see over here, there's a hammer candle, like you said, but the price dumped afterwards, all right? And the theory says that price has to pump after a hammer candle. There's like a million YouTubers out there screaming about hammer candles, how it's really efficient, how they have found out a secret cheat code in trading. And turns out that none of them actually trades. They're just there for the views. They're just there for the public frenzy, knowing absolutely nothing and just making people crazy over absolute bullshit. So using price action alone will help you not even 1%. You have to combine it with a stem level concept. You have to combine it with either supply or demand zone. You have to combine it with either liquidity. You have to combine it with fair value gaps, with CME gaps, with either one of the stem level concept. Is that clear?
Yes, sir.
Okay, so next time, what I want you to do, what's your name? What's your good name, please? Hello?
So my name is Aslan.
Okay. So what I want you to do, Aslan, is next time when you're making your analysis, okay, you have to make sure that you are including one of the stem level concept along the process, all right? You're not just going in with with a branch level concept, because if you're going in with a branch level concept, then obviously you're going to be losing onto it. All right, so you make sure that you're including a stem level concept in it, it's stem level analysis in it, okay?
Okay, sir. Sir, can
Okay.
you please provide a list of stem level and branch level concepts?
Yeah, I'll be making sure to provide it. Furthermore, along all the lessons I have mentioned that okay, this is a STEM level concept, this is a STEM level analysis, this is a branch level analysis, all right? And for you to be able to enter a trade, you have to make sure you're entering with a STEM level analysis and not a branch level analysis, okay?
Okay, sir.
All right, so I hope that's all good for today. And someone's actually saying that can you do analysis on Ethereum 4 hours time frame? Okay, that is a request for one of our respected members. Sure do, we will surely do that. Okay, let's go to Ethereum. So this is Ethereum chart. As you can see, it's rising, and we have already actually marked some zones on Ethereum. Like this is a zone, and as you can see that it's actually respecting it and dumping from this zone. And let's go on to 1 hour, 1 day time frame and see why this zone is actually marked over here. And this is the 1 day time frame, and I gotta zoom out onto this. Aha, there it is. The price has dumped from this area in the past, and guess what happens? The price has dumped from this area in the past. Obviously, it will dump from here because it is a supply zone, right? So the price dumping from there and exactly dumping from this supply zone as well, right? And where has it rised in the past? From this area. And we have already marked it. Let's zoom out and see why we have marked this area. Is there something in the back? Aha, there it is. There's a clear demand zone lying over here in the past, making this area huge in demand. All right. And that's how we knew that the price of Ethereum, it's gonna dump from this point and then this point, and it's gonna pump from this point, right? Now notice that there's nothing over here and over here, which would tell us that the price will pump from here. It's actually way too in the past that the prices actually pump from there. But since we mark every supply and demand zone, so when the price actually comes to those areas in the lifetime, we have actually marked those areas. And as soon as we see these areas, we know that, okay, the price is going to dump from there or the price is going to pump to there, Okay. Now you're asking about the analysis. So now the price is close to the supply zone, all right? And now normally the good predictions are those predictions which are either made at the demand zone or at the supply zone because this that's where you are actually using your stem level concept, actually evaluating it, actually applying it in lifetime. Okay. When the price is in the middle, right? It's really uncertain. Okay. And to think that, okay, I can predict it in the middle, all right, you're just fooling yourself. All right. It's not a very wise thing to do. When the price is in the middle, you try to predict it. All right. So you should know at what point in the chart your probability can be really high, and at one point in the chart, the unprobability can be really high. This is the skill of a skillful trader, that he knows when his chances of hitting a TP are high and when his chances of hitting a TP are low. Because in the middle, obviously, if it's in the middle, then obviously you have to rely on small time frames, support and resistances on small time frames, supply and demand zones. As far as Ethereum is concerned over here, as you can see that there's actually a fair value gap that is left behind. So the Ethereum will surely come down to fill up this fair value gap. All right, this candle, I will mark it and you will see it. Look at this. A fair value gap right here. This candle has nothing, uh, no shadow in front of it or back of it, no candle in front of it or back of it. So with that being said, we know that the price will come down to fill up this fair value gap and then can bump from there. Not just that, there's actually two more fair value gaps, and there's actually another fair value gap. So chances are that the price can dump from there if BTC continues to dump and if BTC dominance continues to increase as well, right? So you have to keep in mind BTC dominance as well. I have explained BTC dominance in detail in my previous lectures, how it impacts the altcoins, and currently it's moving towards the supply zone. If it dumps from the supply zone, then obviously we're going to see a pump in Ethereum. On the other hand, if it keeps on rising, then obviously Ethereum will bleed and it will come towards the previous demand zone that is at the 1521. Obviously, nothing can be said for over the period of 1 month, all right? I cannot just sit over here and say that, okay, from now on, Ethereum is going to keep on dumping for the whole month. No, things change every day, right? If I see something changing over here, if I see a new fair value gap over here, if I see new liquidity forming over here, my analysis will change. That's why we provide you live analysis, live fresh analysis of these coins every day, all right? Because things change every day. This is crypto. It's like nothing is permanent. Any day, just Elon Musk or Trump could just come up and be like, "Oh, buy this coin," and the price could boom. And the thing I'm trying to put in your head is like news. It affects the market so much that sometimes it creates some other pattern which needs to be reanalyzed, right? So this is so far the analysis of BTC where it's standing currently and where it can move in the future. We are close to the supply zone. It can dump from there, obviously after a certain amount of correction because it has just scooped up all this liquidity behind this previous low. And now it can actually scoop up a little bit and then can further dump towards the supply, towards the fair value gap, and that can pump from there. So a little bit of like this kind of movement can be seen. All right. After scooping up this fair value gap, the price can pump back up. And from there, it can dump back down, scoop up this fair value gap, and then pump up to this region, and then actually can scoop up this fair value gap, this one over here. All right. And all of this if BTC dominance continues to decrease, I mean, increase. All right. BTC dominance continues to increase and BTC price is also getting rejected from our supply zone, then it's going to continue in this direction. Okay. But again, this is not permanent. We will update you about live analysis every day, and this is a lesson for you as well. Don't just stick to one analysis. Analyze your charts every single day. See if there's a new chart pattern forming. See if there's a new price action. Maybe sellers are too strong. Maybe buyers are too strong. Some certain levels are getting reacted again and again, right? Because if we see a reaction over here, we know that this fair value gap is getting respected. We are having a reaction from here. So it all depends upon what kind of reaction we are getting and if the chart is actually reacting to that certain level. Okay. I hope it's all clear from here. And now we are going to end this session. If you have any more questions, please ask me. And also, if all of the things that I've taught you is all clear with you guys.
All is clear, sir.
Oh, that is perfect. Thank you so much. All right, then, guys, thank you so much for joining us. Have a very nice day. And today we had a very fruitful discussion. And it's really good that you guys asked me these questions about certain quant analysis that makes me think that, okay, you guys are paying attention. You guys are actually involved. You guys are actually putting in the work, which makes me going. So thank you so much for once again showing your enthusiasm, showing your work. And I will see you in the next class. Thank you so much, everyone, for joining. Have a very nice weekend.